Good morning, everyone. Welcome to Phillip Security Research's 11 a.m. call. Today we have few stock counter updates. For result, we have Oracle's and Valuetronics Holdings. For updates, we have Apple and Geo Energy Resources. And we are also having AMD and just call for Phillip on the ground. Then we will move to technical analysis and followed by our Singapore Weekly. This is our disclaimer page. Our information provided in this webinar is for educational purpose only and should not be taken as any financial advice. So without further ado, I will hand the time over to Yiban.
Thanks, Zi. I'll be presenting on Phillip on the ground for AMD. We were invited to their pre-quiet sell-side analyst call, and present in the call was the Vice President of Investor Relations for AMD, Matt Ramsey. Yeah, so just some updates. First of all, for MI450, AMD shipped 4 MI450 racks for customer testing, basically the Helios racks. And they mentioned that the post-sampling orders was higher than their expectations. For example, their lead customer had expanded their order book. I think this is referring to Meta. And they also received new customer orders for MI450. And in the call itself, they mentioned that this MI450 revenue is expected to surpass MI350 revenue in fourth quarter this year. I think this is the main thing that changed ever since their previous earnings call, because in the previous earnings call, they only mentioned that MI450 will ramp starting from third quarter and will ramp even more in fourth quarter. But I think they did not expect that the demand will be so high that will be as high as their expectations. Yeah. Moving on to the server CPU TAM itself, they mentioned that their previously guided 120 billion TAM, CPU TAM by 2030 is still too low. I think this is mainly because of the widespread adoption of agentic AI. Even NVIDIA also mentioned that the CPU TAM is at 200 billion. So for AMD wise, they are aggressively trying to pursue head node business for customers, GPU and XPUs. So for this head node CPU itself, is basically the CPU that is mainly in charge of orchestrating the customer's GPU and XPUs working together. So they are not mainly processing the CPU intensive work, such as the data extracting, querying data, and logging in, etc. These head node CPU are the ones that are mainly in charge of orchestrating the GPU workloads. And currently, the head node business is about 20 to 25% of the 120 billion TAM. As for competition-wise, AMD feedback that the customers feedback that AMD has technical advantages over Intel and ARM. Though they mentioned that Intel is formidable in the enterprises security side of the CPU. So because with the usage of agentic AI, from the enterprises point of view, these agents are literally in the systems running through the different files and trying to extract the data from the enterprises files itself. So there's a greater emphasis on security itself, and AMD mentioned that Intel is formidable in this aspect. Yeah. For ASP and margin wise, AMD mentioned that their ASP should increase because they are able to pass down the cost increases to customers while transitioning to the 2nm nodes. And the gross margin should be kept at about 50+%. As for warrants wise, we may be seeing some dilution for AMD because AMD issued Meta and OpenAI warrants to purchase $160 million. 160 million AMD shares each. So currently, AMD's outstanding shares is about 1.6 billion. So we may see a potential maximum dilution of 20% from now till 2030 and 2031, because 2030 is for OpenAI and 2031 is for Meta for the warrants to expire. Yeah, so the maximum dilution would be about 20%. Yeah. So I think overall I'm still positive on AMD. We still maintain our call at buy, target price 520 because in order for us to increase the target price, I will still need to see some more color in terms of the progress for the MI 450 as well as the CPU business. Yeah. So that's all from my end. I'll hand over the time to Helena. Thanks.
Thank you, Ekben. We'll continue for update for Apple. So Apple held its annual WWDC last week, basically providing us with more visibility into their AI strategy. So just some of the key announcements that they make. The first is the upgraded Siri is here. They're naming it called Siri AI. So this advanced assistant, it has a more personal context understanding and it's improved conversational capabilities. It's able to better understand the user intent and execute more complex tasks across different applications. They're also able to leverage information from your phone's existing photos, notes, messages, other content in order to provide more relevant assistance. So for example, if you simply type in your phone that you're having a meeting with someone, it can automatically find the person's name from your contact and then book the meeting into your calendar. So it sort of transformed the traditional command-based voice assistant into a more capable and proactive AI-powered digital assistant. They're also expanding on their Apple Intelligence. Some new capabilities include the page monitoring in Safari, context-aware suggestions in Messages, and AI-assisted automation through shortcuts, and also enhance image generation and photo editing tools. And the third point, I guess, they're still having a very strong emphasis on its privacy-first AI strategy. So they're highlighting that most of the AI inference will be directly on device whenever it's possible. So when additional processing power is required, they're going to leverage the private cloud compute, but it will still be fully secure. So no data is going to be leaking out. And now, honestly, this is not announced in WWDC, but they also recently introduced the AFM Cloud Pro, which is a cloud-based foundation model designed to handle heavier workload that exists the capability of on-device model. So they will actually be run on NVIDIA's GPU, hosted within Google Cloud Infrastructure. So this is part of the collaboration that they have with Google Gemini. So we view these announcements as incrementally positive because they do strengthen Apple's ecosystem mode and improve the platform stickiness and create additional opportunities for future AI-driven monetization. But if we just look at the near-term outlook, it remains largely dependent on the hardware demand still. We're still seeing very limited evidence that the AI capabilities are materially accelerating upgrade cycle or driving revenue. The good thing is that due to their collaboration with Google Gemini, they're considered extremely capital light compared to the other hyperscalers. So they haven't really officially announced the number, but it's rumored that they're paying Gemini about $1 billion per year. So if you compare it to the several hundred billion dollar capex spent by the hyperscalers, it is considered very, very light. But AI approach, whether there's going to be successful execution or whether there's going to be broader user adoption, it will be very critical for them. And right now, they're also facing a lot of regulatory uncertainties. So for the Europe side, there's ongoing scrutiny for their App Store and the Digital Market Act. And on the China side, there's evolving regulation and also geopolitical tension. So actually, for both Europe and China, part of the Apple Intelligence and especially the Smart Siri is not going to be rolling out yet. So overall, we maintain our neutral recommendation. We does increase our DCF target price slightly higher to $290 because we raised our 26 revenue and PAMI assumption by 2% and 1% respectively to account for the continued iPhone 17 growth. We also lower our beta slightly to reflect the increased confidence in their long-term competitive position and the durability of its ecosystem. That's all from me. I'll pass my time to Fami.
Hi, good morning, everyone. The Oracle released their result. Fourth quarter revenue met our expectation while company exceeded 15% above our forecast. Moving on to the positive point, the cloud business segment, Oracle Cloud Infrastructure accelerate as the data center ramp up. The revenue was 33% year-over-year increase, which is a record high, accelerated from 84% year-over-year increase from the last quarter. The overperformance was because the AI data center capacity is coming up online as the construction progress. And to add to more, they also secured additional $67 billion of new AI infrastructure contract, and this lifted up their total revenue backlog, which is 15% quarter-over-quarter increase to $638 billion. And then we also think that the demand remains strong. The GPU utilization rate in their data center is at 98%. And then moving on to the next positive point, we see cloud adoption rising, and the revenue grew about 10% year-over-year, while the software deferred revenue was stronger at 16% year-over-year growth. So this shows that this accelerating demand as the deferred revenue is above the revenue growth. So the AI adoption is shifting from people just to experiment to now deploying. The customers of Oracle has deployed over 1,000 agent across its application. So this enables customers to adopt AI through existing solution that they already have with Oracle. So that's quite attractive for them. For the negative point, the capital expenditure exceeded our estimates for both the recent quarter, fourth quarter, and also the upcoming full year, which is 27. The fourth quarter capital expenditure was at $55 billion, higher than what they guided in the previous year, which was $50 billion. And also at the same time, their next year, full year capital expenditure is announced at $70 billion guidance, which is net of 20 to 25 billion of customer prepayment. But regardless, that 70 billion is above the $48 billion of our forecast. So we do think this is because that the build out of the data centers of another 4 major US sites targets project that is started, which this contract were contracted back by the end of 2025. So because of this, the group to revenue to capex ratio has declined to 1.29x times from previously 1.91x times. So indicate higher capex required to generate per dollar revenue. So because of this, we also expect that the cost of goods sold to accelerate 40% above the 36%. And the outlook group revenue is expected to accelerate 34% because of the infrastructure business surging to 109% this year full year. So this is because of we expect sharp ramp up in the infrastructure cloud capacity for the full year, which we think will be more than double because in the recent quarter, the infrastructure capacity is at 1 gigawatt, which is close to the last year full year gigawatt, which is 1.2 gigawatt. And then for another outlook for the OpenAI commitment, which is already running, which is $300 billion, we think the majority of them would begin to roll in 2027, and especially the upcoming IPO between September and November will further strengthen the financial capacity of OpenAI to meet its financial commitment, which would eventually be positive for Oracle. And then for the progress, the 5 largest targets project is on track. The earliest one, which is Abilene, Texas, is remaining on schedule for their 1.2 gigawatt capacity, which is already halfly complete and to be fully complete by the end of 2026. There are 4 additional sites of data center target project would begin delivering their capacity in the first half or the second half of the calendar 2027. We maintain a buy call rating, but we lower the target price to 244 from previously 275 because we raised the capital expenditure for the 2027, to $70 billion as guided, but then it was above what we expected. Oracle remained the fastest growing cloud infrastructure provider, and we do think that is likely to continue to be favorable by the customers because of the complete end-to-end stack from infrastructure to cloud applications and also database that they provided. The previous 2 quarters of booking of 75 billion, which is under the new funding models, where the customer would have to bring their own hardware equipment and also prepayment to run their cloud, is seen as a strong preferable by the customer of Oracle, because even with their higher requirement, they still do that. They still book with Oracle for the cloud infrastructure. And this booking is now making up 12% of the total backlog the Oracle is currently now have. Yep. So that is all from me. I will pass to Darren for his Phillip on the ground. Thank you.
Yeah, thanks, Fahmi. Yeah, I'll run through Just Co's IPO. Yeah, so they listed last month at 94 cents. So it was 32 million shares in the public and private placement tranche. So that's at 94 cents and it was 3.4 times oversubscribed. And there were 74 million shares that were issued to cornerstone investors. So since the IPO price last month in May, the share price has fallen to about 65 cents. So that's over 30% drop. Yeah, so just some quick highlights on what they do. So they are a flexible workspace operator in the APAC region. Their market cap is 120 million. Their net cash is 100 million plus as of December 30, 2025. So currently they operate 50 centers. 28 of them are on traditional leases, like your usual. They lease up the space from the landlord, and then they will just rent out the space. And the other 22 are on management contracts. So for the traditional leases, they usually lease up 15 years. So it's a 5 plus 5 plus 5. So they do not lock in into a long 15 years. So in case like anything happen like COVID, then if they're on a 5 plus 5, 5 plus 5, then they can just close any underperforming centers. So that's for the traditional leases. And currently they are operating under 3 brands. So the Collective, which is the luxury premium grade A office. So currently they have about 15% of their centers are the Collective, 10 to 15%. So that's the top end luxury. And then there's a premium segment, which is Just Co. And the boring office, which is they only have one boring office, which is the Essential brand. So that's mainly in grade B. For Just Co, which is the bulk of their centers, it's about 80%. Yeah, so mostly in grade A, grade B, and office, retail, or industrial properties. Yeah, so for Just Co, currently their customers are some of them are mentioned in the slide there, like General Electric, Klook, Tencent, TT, Kupang. And for flexible office penetration in APAC in 2024, or rather in 2022, it was at 4.4%. So it continues to increase. So it's 5.9% as of last year, and it's forecasted to continue growing to 7.5%. So why this growth is expected is mainly because of the increase in hot desking. The companies are less willing to fixate on a jobs on like so-called secure longer leases, like maybe the traditional 3-year lease. So they are more into hot desking. So that's why they flexible workspace for flexible office penetration is increasing, as well as the return to office. But companies just not fixating into a so-called long-term lease, like I mentioned, and as well as capital and cost efficiencies for tenants without the significant upfront investments. Like when companies they secure, or rather they lock in a new lease, usually they will have some upfront capex and such. So we avoid that by renting in a co-working space, as well as flexibility in tenure and lease terms. Yeah, so for them currently, Just Co, of their revenue, 150 million in FY 2025, 90% of this revenue it came from private office, and 5% from meeting rooms, and the other 5% is common areas. So currently they have about 30,000 occupied workstations. So most of that is from the private office, and of this private office, about 53% of these occupied workstations are from large corporates, and 47% are from SMEs and startup. Yeah, so they believe this 53% large corporates is a good mix, as this 53% can be the stable base, while this and usually for these large corporates they take about 6 to 9 months to decide and actually sign this commit to the occupancy. But usually SMEs are shorter. They take less time to actually decide and sign the lease. So they believe this is a good mix, and currently the occupancy across the whole Just Co is about 84%. Yeah, and the average membership tenure is about 15 months. Yeah, so currently in Singapore, each workstation in the private room or private office is around $700 per month, while for hot desk is around $260 per month in Singapore. But across the APAC region, the average is about 460 USD per month for the private workstation. Yeah, so for their business strategy, like they raised the funds for this IPO is mainly to expand, open new job centers. So they are looking at 28 new centers. So their core focus is to open 9 centers in Japan, as well as open the remaining like 19 in existing markets. And that will include about 14,000 more workstations as well. So usually when they open a new center, the payback period is about 18 months to 24 months before they can break even. So if you look at the snapshot at the bottom, like the revenue growth, it's been growing, but what they look for is the cash EBITDA is been growing more significantly, mainly because like they're expanding new centers, and they use cash EBITDA as a metric because if they use a net profit, there are lease liabilities in there, so it's not really representative of their operating performance. So they prefer using the cash EBITDA metric. So from our perspective, the share price has really fallen to about 65 cents, and we think the share price will remain weak in the near term. And any recovery or re-rating potential we think will probably come from the execution of the securing the new job centers, and as a result, will turn around in their cash EBITDA and their financial performance. So we definitely think in the near term, there's really no share price catalyst for Justco to return back to the 94 cents IPO price, unless we think the financial performance can really improve from the opening of the job center. So that will probably come within a few years, if any. Yeah, so that's our view for Justco. Yeah, that's all for me. I'll hand over time now to Zane. Thanks.
Thanks, Darren. Good morning, everyone. On to technicals. So first out, on the S&P 500 last week, we saw a rebound after price retested the 7,330 swing low support. And then this coincided with the weekly 10 ECB level as well as the lower bottom cap at the daily time frame. So I think this week wise, I'd like to see this rebound continue to retest some of the recent breakdown levels and perhaps the close to the recent high around 7,600. Yeah, so for now, the first recent level is likely to be at the 7,465 to 7,540 area. And then the current support is likely to be at 7,335 to about 7,390. Yeah, so that's all from me. I have over time to Paul. Thanks.
Yeah, thanks, Zane. So we'll just, if you go back to the first page. Yeah, anyway, this is regarding Geo Energy's first quarter update. The report came out few days earlier, just as I was away. So let me just give an update. Basically, the update is for us is still on track in terms of the outlook. So the results was below expectations. I think if you look at the PAT was only 7% of our forecast. So what happened was production declined 36%. And sales declined about 48% in terms of the quantity of coal. So if you look on the left, so one of the reasons is because so Geo largely has two large mines. One is called TBR, the other one is called TRA. Because TBR is slowly going to reach their mine life, so their focus will be on TRA. The TRA is where their new infrastructure, that $190 million road cum jetty will be built. But critically, they have not changed their production target. So they are still maintaining about 11.5, let's say 12 million metric tons of production, even though this year the first quarter only done 2. So they expect to catch up strongly in the second half, especially July onwards when the infrastructure is completed. So you look at the positives, the integrated infrastructure is 90% completed. By July, they are looking to start production. I think right now they are testing the roads and so forth. The negative is, as we mentioned, the decline in production, and that dragged down revenue and of course dragged down earnings. So we maintain our forecast. We still think the ramp will happen. And the second reason is coal prices, at least in the second quarter, are already up 30-40% year on year. So this will also give a lift to earnings in the second quarter. No change in our target price and buyer recommendation. So the share price has been under pressure ever since the government Indonesian government announced some centralization of commodity exports. So this has not only hurt Geo, also caused a sell down on all the palm oil companies. But our view is probably not feasible to centralize all the exports. So Indonesia exports almost 500 million metric tons. Even the largest coal companies, or sorry, largest trading companies in the world only do, if I'm not mistaken, 4 or 5 million Indonesian coal. So it's logistically is I wouldn't say impossible, but it's extremely challenging when you're just starting up to do this. There's logistical issues, there's administrative issues, financing issues to do it. So I think the Indonesian government has kind of backtracked. More importantly, we think it will be more of a monitoring function, because what you want to monitor, the key thing you want to monitor is that they don't underprice the coal or palm oil, and then as a result, they pay less tax. And if you underprice, you also kind of keep more money offshore, because when you sell, the foreign currency coming in will be lower too. So it's a tax and also currency control uh, um, implementation that they want to do. The third point is that the road is almost completed. We expect by July, and in early May, one of the shareholders mentioned that they are looking to buy a stake in the whole infrastructure, that 190 million road, valuing it at 1.5 billion. Of course, we're not incorporated this. We still need to see the money. So the investment's probably going to be happen in third quarter and first quarter. So we need to see the size and for it to happen. So it will happen in two stages. So likely in next quarter and also first quarter of 27. Next slide. So next one will be, if you go back to the title, Valuetronics. Yeah, okay. Anyway, for Valuetronics, it's regarding the second half results. They are returning more capital, but I think the earnings is continue to be sluggish for them. Next slide. If you look at Valuetronics results, the results was slightly below at 91%. What happened was the effective tax spiked up. It was from 5% effective tax to 15%. Mainly because they utilized losses in Hong Kong, and also tax incentives has ended. So they are still enjoying tax rebate in Vietnam, 50% of the corporate tax from zero, no, from 100% to now 50%. And then eventually to zero. So that is actually the one that's hurting the earnings. I mean, they didn't really guide us on this, so they kind of caught us by surprise too. The positive is their ICE. If you look on the table on the left, the ICE means industrial products. So you're talking about printer labels, network equipment, and so forth. So that is the one that's helping drive the growth in revenue and also margins. The negative is that the consumer, so they still have some legacy, some of those where the customer is exiting. Largely Phillip products. So we think these are like your shavers, the electric shavers, electric toothbrush, where their customer is kind of exiting. I think they are sending the production to Indonesia and so forth. So we lower our earnings to account for the higher tax. Our target price we raised. I think the whole market just being re-rated. It's not so much an earnings growth story. It's mainly because the whole industry, this stock used to trade at maybe 11 times, then now it's hitting almost 18, 20 times. Similar to what is venture. I mean, venture is the big one. So venture is the one pulling up the whole industry. So this re-rating is driving the share price rather than earnings growth. Then we still maintain our accumulate. We still think it'll be a sluggish year of earnings. There'll be two drags. Number one, like we said, the legacy consumer product, and also higher effective tax. But what is also helping the share price is that Valuetronics is always known to have a very strong balance sheet. They have a net cash of Hong Kong dollar around 1 billion or 1.1 billion. So after many years, they are finally starting to return the cash. So they committed to pay special dividends of at least 16 cents. So if you add that back, you're getting maybe by now, because the share price was bigger, probably about 5.5 to maybe 5.8% dividend yield. And they're also committing to buy back shares. But judging by the volume of the shares that buyback, I don't think we're going to move the needle. But I think this is, and they're also raising their payout ratio. So I think the dividend, the yield is the one that's holding the share price up, rather than kind of expecting any strong earnings growth. Next slide. So I'll move on to our usual tactical views. So data out of Singapore has been construction. So construction industry, after the very strong construction awards last year, I can't exactly remember the year-on-year growth, but this year is a bit slower, but still growth about 6%. Construction payments here is really activity. That means really work on the ground. So year to date is up 20%. So this will benefit all the construction materials. So especially ready-mix concrete. I think ready-mix concrete volume this year is probably going to grow like 30%. So of course, after you award, then you need to make payment, you need to do the work. So that's why the earnings for Pan United should be quite strong. We also had some data out of Changi. I think passenger traffic is sluggish, but I think cargo is very strong. We have some inflation data coming up from the US. This is the CPI in the US is 4.2. It's the highest in 3 years. But I think most of it is because of energy. I think that's pretty known because energy inflation jumped up 20%. I think the gasoline price in the US is up almost 40% year on year. But the core CPI, the one that's which everyone's watching, also climbed up, but it wasn't as high as we were expected. So inflation is still trending up, and I think it's still ahead of the Fed's forecast. Yeah. Next slide. So in terms of our tactical views, sorry, it's a bit long. So anyway, first is of course SpaceX. So their IPO now is worth their market cap now is 2.1 trillion. So on the price to sales, you're looking at 112 times price to sales. But the revenue growth isn't very strong. The first quarter revenue growth is, of course, only 15%. You probably get some stronger numbers because Anthropic signed a deal with them, for their data center, probably 1 billion a month or something. But if you want to put in the Tesla premium, so Tesla even at the peak on a monthly basis was 24 times price to sales. So 112, even with the Elon premium, is very high. Of course, you can put whatever price to sales if you want to have optionality on Mars, on space, infinity and beyond, I guess. But the thing with SpaceX is just to take note that the wrapper is space, but the real opportunity that they are targeting is actually enterprise software. I think in the prospectus, they said they're targeting 23 trillion total addressable market, which is actually AI software, LLMs. So you're actually competing against OpenAI, Anthropic, and Gemini. So that can be the other issue. It's not really space that you're buying AI. Because most of the capex is all going to AI and so forth. But anyway, in the near term, I guess the trading angle for SpaceX is you're just, lack of better word, front running the passive flows. So FTSE, they'll be included in FTSE in 5 days, MSCI 10, and then Nasdaq 15. S&P is not clear because in S&P, I think someone mentioned to me that, which I double checked too, that there is a earnings requirement. So if they don't meet the earnings, SpaceX may not be included in S&P. There's a profitability requirement, but again, this is SpaceX, so we're not sure whether they can actually even change the rules later on. So I think the next 15, I guess 5, 10, 15 days still looks okay because there's a lot of flows. So the next 2 weeks looks okay. But the real test will be in August because in August, 20% of 12.2 billion shares will be allowed to be sold. It could be even 30% depending on the performance of the shares. So probably after the June quarter results, if you assume it to be August, so August is when all the selling could come. Yeah, but at least the next 2 weeks is, I guess, can be quite fun. I guess I don't know. Yeah. So anyway, the other thing, topical things, of course, all these AI infrastructure, data center, and so forth. But ultimately, all these data center that you see is all anchored around OpenAI. There's ChatGPT and Anthropic, which is cloud. And the estimate right now is both companies' revenues, about 85 billion, can hit to 300. Of course, our skeptical view is also, if you sell something cheap and loss-making, obviously you can sell a lot of it. And 300 billion means you're actually bigger than Microsoft. But the more important thing is that this 85 billion is anchoring 800 billion in data center spending. So because of this, all the Max 7 spending all their cash flow for data centers. The best way to play this, we think, is still semiconductor, especially the equipment. Because what you are playing is just the capex cycle in AI. We're not going to stay around to see whether the ROI on the capex whether can recover, but at least the first one to do is still the capex. And we think all these LLMs have got no choice but to invest in compute, because if you don't invest, you cannot compete. And so that's why it's very important to watch OpenAI and Anthropic's revenue, because if the revenue continues to grow, hit the 300 billion, then all these capex can be justified. Max 7 may not be the best way to play, because if you look at Alphabet, they're spending 185 billion in capex. Because officially they 6 years depreciation, so the capex could actually cost a 20 billion in depreciation this year, and this could be a big drag on earnings. So I'm not sure whether Max 7 will be the best way to play this AI capex. I know this is just our trading, our kind of tactical views. The key highlight to watch will be the Fed decision on the 17th of June. US market closed on Friday. Then our corporate insights webinar. So we'll have webinar next week is AIMS APAC, then LHN IX Biopharma Collywood is open to anyone. Next slide. This is just to show a bit hard to see, but the one that's jumping out. This is the one on the left is just the CPI in red, and then gray is energy. Used to come down so much, but then now it's spiking up. So that's the one pushing up energy, inflation, which is I think nothing new here. So if you do a trend line, that means this is just a mathematical trend line. Inflation looks to be climbing up, so it's going to be hard for the Fed to raise rates. Keeping it unchanged is probably the likely path. And of course, with the war hopefully ending soon, then he can say there's no reason to raise rates because all prices are starting correct. Next slide. Then if you look at the table on the left, so the blue line is all the capex. You can say that at like the data center spending. So and the red line is the operating cash flow for all these big tech. I'm talking about Microsoft, even Oracle is in here. So what we're just trying to say is that this is the biggest wealth transfer because all these companies used to have a lot of operating cash flow. Now all the operating cash flow, almost every single dollar is going to data center spending. And as you all saw the news, now Google is also going to raise some equity to fund the data center. So the best way to play is still where this money is going. So all this data center money is where you want to play the cycle, rather than through the Max 7, I guess. Then the chart on the right is just to see how far this rally has gone. So the blue line here is when Netscape. Most of us can't remember, but I mean Netscape was the browser. So when Netscape was launched in January, the blue line is how the dot-com bubble was formed. From 100 jumped to 600 or 700, 7 times. So the red line is where AI, when ChatGPT was introduced sometime in January 23. Again, we're not saying, again, as usual, we're not saying this will replicate. I'm not saying that the Nasdaq is going to jump all the way up here, but we're just showing you that if there is a big bubble, there's room for this bubble to double from these current levels or even triple. Yeah, next slide. Okay, next slide. So this is our monthly performance. This is in our monthly report. But as usual, every beginning of the month, we usually just give a review of how the Singapore market performed. So the one on the left is just all by sectors. So the one that did well was industrial services, because this is where we lump electronics, everything inside. So venture, everything all inside here. So that did well. The worst is probably shipping. Then the Singapore market was up about 2.55%. If you look at the top 10 gainers, these were the gainers. The big gainers was all the semiconductor stocks and tech stocks, and even the rubber gloves like Riverstone. The losers was all these Indonesian linked ones like palm oil, coal, and so forth. The one at the bottom is the STI gainers and losers. So like SATS, Venture, and then on the one at the bottom right is Yangzheng, Genting. These are the big losers, index losers. Again, all this just for your reference. Next slide. Then in terms of by various asset class in US dollar terms, Singapore did reasonably well, 2.4. So for the year, we're up about 9.9% US dollar terms. And then Asia ex Japan did the best because of Korea and Japan, and then even better than Nasdaq. So which is strange because Asia ex Japan got not only tech, but tech has done so well, especially semiconductors. Then gold is here and commodities. Next slide. Then this is the performance by local currency. So the top ones are the North Asia countries. If you look at South Korea, so South Korea is up 100% this year. Taiwan, Japan. Then the worst performers have been Indonesia and also Malaysia, which is generally flat. This year about 0.2%. Even our next 50 is all up only 5%. So much for that index. Next slide. And then this is our usual model portfolio, just for illustration. So this is our model portfolio of 10 stocks. It was basically flat this month compared to the market up 2.5, and for the year it's up about 15. Again, all this just for illustration. So if you look on the left, the banks did well for us, and semiconductors. Geo was the one that was the big drag, Prime and so forth. You can see from here. So property also bounced back. Okay, I think this is just for reference. Okay, thanks everyone. Okay, move on to Q&A. Thank you, everybody.
Thanks, Paul. Let me go through some of the questions first. I think there's some on the banks. So basically, a few of them is asking why is DBS's price lagging? OCBC rose today, more specifically, OCBC and UOB rose by 1%, whereas DBS rose by 0.3%. Why is that so? I believe it's a bit of a rotation, maybe rotation out of the largest bank in Singapore. As we saw their price, they go up quite high, and then going into both OCBC and UOB. But to be fair, it's just one day, and also the difference isn't much, it's only by like 0.7%. So yeah, I don't think it's anything significant, considering that it's such a short timeline, and also it's a very small percentage. Another one on the banks, asking what were the drivers for the pullback on all three banks, and specifically DBS, and also is it just for profit taking, and what is our TP? So to clarify your question, the first question, no, we don't change our TP, and our recommendation for DBS is $67.50. We have an accumulate recommendation. For OCBC, it's $24, and we have a neutral recommendation. And for UOB, it's $39, and we also have a neutral recommendation for UOB. Yeah, so yeah, similar to the previous answer I gave, I don't think it's really much of a significant pullback. If you look on a year-to-date basis, or even the 3-month basis, they are still up quite significantly. Yeah, so I think it's really just a bit of rotation and also a bit of profit taking. Yeah. So I still believe that the fundamentals for the banks are still there. I mean, now with the US-Iran deal, if it does come into place, then it might lower the rates, right, as from the previous higher for longer that we were looking at. So that might impact their net interest margins slightly. But I think we believe that the banks will benefit from the loans growth and also the fee income growth that they are seeing. So those two will be the biggest drivers for the three banks. And the high dividend yields that they are paying is also very positive. The other big topic, which I think Paul did share a bit about on SpaceX, but I think there's a few more questions here asking, any thoughts on the SpaceX price outlook in the coming weeks? We don't have a TP for SpaceX, but for the price outlook, like what he said, I think the few things watch out for. Now because at the IPO, right, the float that they gave was, I mean, the number of shares that they gave was a lot lower than what was requested for the demand. So we could see, the share price do pop up quite a bit, based on this higher demand, right? Then there's outpacing the supply. So we could see the share price actually increase quite a bit, right? And a bit of volatility, as we see some sort of price discovery being played out. And also the momentum and the retail enthusiasm, surrounding SpaceX, and more particularly surrounding Elon Musk, right? Because a lot of his supporters and his fans, right, they do really just buy into his story without, looking at the fundamentals that closely. So I think those will be the key factors, And the last one, which Paul did talk about, is the lockup period. So right after the lockup period, we could see some selling, right? I think very likely we will see some selling, and this could cause some downward pressure on their price. Yeah, so I think to be very careful, because fundamentally wise, they are still a loss-making company, right? And they are still burning cash like crazy. I think it's almost 10 to 20, 10 plus 10 billion a quarter. So you look at it as 20 billion a quarter. So they're not profit making. And I think for them to continue to grow, they will need to burn even more cash. If you look at what they're banking on, right, is selling it, having this collaboration with Anthropic and Gemini, right, which only brings in like $1 billion each per quarter. So that's $2 billion. You offset it, not even 10%, less than 10%. Yeah, so I believe that it's just to be very careful because it's a lot of it's really running full steam on hype, especially on the Elon Musk hype train. So it's just going on. Yeah. Yeah, and then there's another one here on SpaceX, asking what is the biggest business segment and the growth driver in SpaceX. So the biggest business segment will be Starlink. It makes up about 60% of their total revenue still. So the thing that is the least talked about is actually it's still running the whole business. Yeah, and it grew by around 50% year on year for Starlink business. Yeah, and it's really the only segment that makes money, right? But what SpaceX is being sold on, it's firstly on their space, their launch, which is loss making, and also on the XAI and Grok. So that is both are loss making and and if you talk about the AI segment and XAI is losing even more money, and they have to spend even more in order to grow it further, right? So yeah, the biggest business segment that's where all their fundamentals are at, but people are not buying into that. Right? They're buying into the vision and the dream of the AI business, and, maybe even putting that data center into space. Yeah, those are the things that they're buying into, right? Not the satellite business, which is still the only thing that's making them money. Yeah, which is why I also bring back to my previous statement on you have to be very careful around this because it's really a lot on hype. Let me just check if I got any more questions. Yeah, one here. Is it better to load up SpaceX in August instead for a better entry price? Yeah, I mean, if you look at it this way and what we've said, yeah, it might be. I mean, of course, we're not fortune tellers, but based on the fundamentals and everything, it would seem that there might be some price, like the share price might decline a bit right after the lockup period ends. So it could be possible, yeah. But then again, like I have had this sell call on Tesla for the longest time. If you do follow what I write, right, and what I present, yeah. But it's still running on still running, right? So and still staying above like close to $400. Yeah. So it's really the hype that Elon Musk is able to sell, and he's able to convince a lot of people of his dream. Not just retail investors, institutional investors as well. Everyone, of his dream, and I guess that's what I don't know what's his secret power that he managed to do this. Yeah, but he hasn't really proven it at all, with all the with the bottom line and with all the financial statements. Nothing is proving it so far. Yeah, there's a tech outlook on SpaceX. Yeah, Starlink is propping up the cash burn for XAI and space launch. Yeah, definitely. I think it's not enough. It's definitely not enough, which is why they have to do the IPO, right? It is definitely not enough. They have to get a lot more money than whatever Starlink is giving them. Yeah. So it's great. If it's enough, then they won't be loss making, right? Because Starlink will help to boost give up enough profits to have that spend. Yeah, they only made like 4.5 billion, I think. Yeah, and they are spending 10 billion, 20 billion on capex and loss combined. So overall, I think you're looking at 25 billion kind of loss, and then this 4 billion is just making it less of a loss. Yeah, so it's not really enough. Yeah. Yeah, let me double check on the lockup period again. I think Paul did share a little bit earlier on when the first initial batch will go out. Yeah, but I will reply. BY, I'll reply on the chat here. Yeah. Yeah, okay, there's one on iFast as well. Yeah, so iFast, I believe that there will still be room to grow. The Hong Kong, I believe the Hong Kong e-pension business has sort of been priced in, but they did give some form of further guidance the last briefing that they had, right? And I think they give more clarity now into where the growth will be coming from, and a lot of the growth will be coming from the iFast Global Bank, right? So I believe that the fact that if they can meet that growth, right, into the iFast Global Bank, which they are showing, but it's quite small still. If they can ramp it up, then I think that's where the growth will be coming from. Because the rest are all still very stable sort of growth business. Yeah, okay. Yeah, okay. So I'll answer this last question before I hand it over. Say by commingling XAI space launch in SpaceX, Musk is trying to appease early investors of the loss makers for years. Sorry, let me reread this question. Musk is trying to appease early investors of the loss makers for years to unlock their cash. Yeah, I think exactly they're trying to not just appease early investors, but they're trying to sell the whole thing together. Yeah. So I think I read some articles that said, SpaceX isn't really about space anymore. It's more about selling AI company, right? Even if you look into how they actually classify their company, right? It used to be a space company, but then they changed before they IPO. When they IPO, they changed their company classification into like more of a data center AI company, so closer to what Anthropic, OpenAI, Gemini, those kind of companies. So we're not very sure where I think they're still pushing towards the AI side, right? So, but the name is SpaceX, and then they keep talking about space, talking about launchers, rockets, satellites, all these. Yeah, but the biggest bulk is still, the spend and everything, right, is coming, and where his focus is, I think, is AI. Very similar to Tesla. Tesla is a car company, but he's selling the robots and full self-driving and everything else, right? But he's sort of like, pushing aside, yeah, I'm not actually selling cars, I'm selling a dream. Yeah, which is why I think I called this like a pipe dream before. Now he's selling pipe dream in his other company as well. So I guess it's the eventuality when, if they do merge it together, then, we don't even know what they're selling anymore. Yeah. Because they now have cars, space, satellite, rockets, and Grok and AI inside. And data center also now they're doing. Yeah. Yeah, I think it'll be many, many years for them to unlock their cash. Yeah. Okay, thanks. I'll hand it over to the rest of my colleagues. Thank you.
Yeah, maybe I can try to answer. There's two questions about FOMC and Jerome Powell and Kevin Walsh. So the first question is about what we're expecting from Kevin Walsh at this upcoming FOMC. So there's two main areas we are watching. First is his view on inflation, whether it is persistent or temporarily. Second will be under what conditions Fed will consider resume tightening. Yeah, so basically this is two main area we would like to know from the Fed. So the second question is about how Kevin Walsh is differ from Jerome Powell. So both they are different in the way approach to Federal Reserve balance sheet and also economic metrics. So first about balance sheet. So Jerome Powell actually favor to utilize the Fed balance sheets to stabilize market by holding long-term government bonds and mortgage-backed security. While Kevin Walsh he is favors to reduce the Fed balance sheet, and he prefer to use interest rate for monetary policy. So the second difference is economic metrics. So Kevin Walsh is preferred to shift the Fed inflation targets by using trimming, which will exclude the temporary price shock. And Jerome Powell, he is using the standard CPI and PCE for the inflation rating. Yeah, this is the main two difference. So the third question is there any possible rate cuts after end of US-Iran war? The answer is no. in fact, market are pricing one rate hike by the year end. So the main reason is because yeah, like Paul mentioned just now, we can see the CPI is trending up, and overall it's still above the Fed inflation target, which is 2%. Yeah, that's all from me. I will hand it over to my other colleague. Thanks.
Yeah, thanks, Zi. I'll take on some questions. Any substantial impact to semis on the discontinuation of tungsten hexafluoride by the two Japanese supplier come 1st July? Yeah, so yeah, right. The two Japanese supplier will stop the supply of this critical chemical used in chemical vapor deposition. So basically, it's just a step within the wafer making process, and this gas is critical in that step itself. Short answer is that I think in the medium to long term that the impact would not be substantial if we are looking at a 1 to 2 year time frame. Because these two Japanese supplier. Okay, so I'll just talk about the short term impact first. These two Japanese suppliers supplies about 25% of the global tungsten hexafluoride supply. So the remaining 75% comes mainly from China. So that may be the short term impact in terms of news flow. When there's more news about this supply being hit, I think semis may face a short term pullback. But I think in the long run, there are substitutes for this gas itself. For example, the industry is also using tungsten chloride. So this is another chemical which may not be a perfect substitute because it has lower yields. But the entire industry is also migrating from chemical vapor deposition to the atomic layer deposition using tungsten itself. So I mean overall, there are ways to go about this supply disruption, and I think the industry will be able to adapt very quickly to this potential disruption. It's just that in the short run, there may be some short-term negative news flow. Yeah. Next question for Weeher, my comments on the current price impact given its latest overseas acquisition. Yeah, so just for context, Weeher entered into the Hong Kong PBSA market. Their first model is a 200-bit master lease. So that one will start to be earnings accretive starting from the second half of this year. I think that one is positive for Weeher because overall, Weeher is not going to pump in a lot of capex for this particular property itself. It is a master lease, so mainly they'll just pay the rental to the landlord, and they will earn the rental arbitrage from it. I think the maximum capex will be about less than 3 million. Yeah. For this property. The next property is the 500-bit 500-bit acquisition of the commercial building. So that one we do expect a higher capex, about 400 to 500 million Hong Kong dollars. Yeah, so I think that one will be spread across these 2 years before the property come online in expected 2028. Yeah, so that one is a slightly higher capex because Weeher has to convert the commercial property into a PBSA. But we do think that Weeher has the cash and the balance sheet to do so because following their sale of the PBSA Fund 1, there's I think $300 million in cash extra. Currently about 150 is parked under receivables. So they have quite a lot of cash and balance sheet power to take on this capex. Yeah. So hopefully that answers your question. There's a question addressing Paul, but it's about semiconductors, so I'll just try to take on. I read in your daily report that semiconductors are the best way to capture the growth in AI. Do you mean packaging and testing equipment areas here, like the ones produced by UMS? Can you elaborate a bit on these semiconductor manufacturing equipment? Yeah, I think the the most direct way to play this, as mentioned by Paul, is still the high-end semiconductor equipment players, and it's referring to the three biggest players in semiconductor equipment, basically ASML, Applied Material, and Lam Research, because they are the ones directly in the semiconductor supply chain of producing the wafers and the chips itself. For example, ASML is the equipment player that does the printing of the patterns on the wafers itself directly. So as the wafers get smaller, ASML's equipment are the only ones that can do so at a very small scale. So this is a very direct way to play semiconductor equipment. But you're right to mention that UMS, for example, Singapore semiconductor companies like UMS, Franken, and AEM, they should be beneficiaries from this trend as well, because UMS, for example, UMS direct customer, Lam Research, they are also one of the direct beneficiaries. Yeah, I do think that UMS is also a way to play it, just that it's a bit less direct. Yeah. My previous sharing on SoyBuild, is it still valid? What is its target price? Yeah, so our target price still stands at 1.2. So previously we trim off our target price a bit because we saw a slight decline in industrial demand, private industrial sector demand, because of the Middle East conflict. But I think from the latest figures, industry figures in April itself, private industrial figures actually rebounded. So based on the trailing 12 months figure, the private industrial contracts awarded is up by 12% year on year. Yeah. So we could see a recovery in terms of industry demand within the private sector. Yeah. Currently, our call is still a buy on SoyBuild. Yeah. 1.20 target price. Yeah, why is SoyBuild trading sideways or lower? Yeah, I think it has got to do with the people's sentiments and news flow, because SoyBuild's order book is predominantly from the private sector. About 70 to 75% is from the private sector. And I think because of this Middle East conflict, there may be fears that the private sector demand may weaken because of this conflict itself. That's why SoyBuild is trading sideways or lower. Yeah, that's my view. For Pan United, what will be the volume projection over the next 3 years? We don't directly do volume projection for ready-mix concrete over the next 3 years. But I think just to give a little bit of insights, for this year itself, based on the contracts awarded, BCA expects the contracts awarded to be about $50 billion at midpoint. So that's about flat year on year, because last year it's also 50 billion. So last year there was a 14% year on year growth. So I think for 2026 and 2027 itself, Pan United's volume growth will be about 10 to 15%. And then for 2028 itself, that volume will mainly come from 2027 contracts awarded. So for 2027 to 2030 itself, BCA gave a forecast of about $42 billion midpoint. So it's a slight dip of about 17%. However, even with this dip itself, it is still about 40% higher than the historical 20-year average. So even though there is a slight dip, it is still at very elevated levels because of the longer term rejuvenation of the Singapore infrastructure. Yeah. So that's why I think overall for the next 3 years, Pan United's volume will be at elevated levels. Yeah. Yeah, I think I hand over the time to my other colleagues. Yeah, thanks.
Yeah, thanks, Ivan. Yeah, a couple of questions on the JustCo presentation that I did. At current discount of IPO price, is JustCo a buy now? with the collapse of WeWork, is this business model still valid? Yeah, so actually, I think the collapse of WeWork also and what happened to WeWork also definitely affected the sentiment for retail. So which was why really partially of it, part of it was why the share price really got sold down so significantly. And there's also another follow-up question. Well, is it a buy now? And did I listen correctly? You mentioned that just going to take a few years to get back up to IPO price due to yeah. So actually, that comment was actually just my view. So I mean, I might be wrong, of course, but I feel for Justco, my view is because there is no significant catalyst for it for the share price to really re-rate. Currently the in the process of using the IPO proceeds to really expand their business and so open 28 new centers and as a result improve their financial performance. Yeah, so that will take some time. So for that for the new centers to really show up in the financials, that will take a couple of years at least. Yeah, so as the payback period for opening a new center is usually around 2 years. Yeah, to break even. Yeah, so that's just my view for the Justco IPO. Yeah, I mean, of course, I might be wrong. Yeah. What is the dividend yield for UH REIT? The current price, is it good? Oh wait, so that is UIB REIT. Yeah, so for UIB REIT, there's no forecast, or rather we don't cover, so we don't have a forecast. But let me see. Yeah, but the dividend yield I believe is 8.78%. Yeah. Yeah, what's the dividend yield? Yeah, 7-8%. Current price is a good buy or another value trap. Yeah, so that will really depend on the financial performance for sure. Yeah, I need to take a yeah. Let me dive deeper into that, and I will type my answer there. Yeah, thanks. Let me get back to you on that. Thanks.
Yeah, okay, thanks. Let me just try to address some then. I think this is an Adobe question I need to farm me. Hi, Paul. What's your view of the resignation of the lead independent director of CSE? Oh, okay. I don't have any specific insights about if I had to if I had to speculate or guess, because it was mentioned very rare, but they mentioned that he was leaving because of some issue with the controlling shareholder. At the same time, there is a strategic review underway, so it could be regarding that strategic review. I think that major shareholder probably wants to exit, and then maybe this lead independent may not want to. Again, this is 99.9999% speculation, but because the biggest issue now, the main announcement that came out from them is that they are undergoing a strategic review. So most likely it was regarding this. Hi Paul, when do you expect index funds to start buying? Example, SpaceX, 15 days for Nasdaq. Start buying before or after? Yeah, they will have to include it on the day itself. So probably on the, let's say on the fifth day, they won't buy on the sixth day. They won't buy on they can, because you can only include it. So normally at the end of the day, there will be a lot of these arbitrages that will pass them that block of SpaceX shares so that they can include it and then they can sell some. So they won't be buying on that day itself. It's only at the closing day. There were a lot of these arbitrage firms that will cross that block of SpaceX, or there will be some bidding activity, my understanding. Because if you buy on that day, on the fifth day, assuming you also may not be able to follow the index closely. Yeah. And the S&P 500 is not confirmed yet, because you still need that earnings test. But I'm not sure, this is SpaceX. I'm not sure they can try and get some waiver out of it. Like they got the waiver from all the other three indices. Your opinion on Keppel Infrastructure Trust, I'll pass that to Darren, and on Vicom. So for Vicom, they did really well because, as you know, most of the cars right now have to change that device, I just slipped my mind. What's the device? I think everybody knows what device. And that has ended in December, probably a bit of overrun into January, February. But that's it. I think you got that big growth, it cannot be replicated. The RU device on the car. Yeah. For the authorities to collect the ERP from us. Okay. Yeah. So that is the area that gave them the growth. So after that, we don't think there'll be much growth after that. Yeah. The team on US healthcare sectors, any counters should be, yeah, we don't follow US healthcare sectors. Yeah. And because that's a very challenging sector to cover because of all the legislation and so forth. So that's not one of the sectors we will probably cover even in the future. Our focus right now is still going to be tech because that's the most exciting sector out of the US. And whereas healthcare is really very policy driven, so that's not something that I think investors will be as interested. Paul, are you still positive on Alltech given its current price trend? What's your target price? My target price is 279, if I'm not mistaken. No change in our target price. I think the market, the share price correction that you saw is because there was someone wrote that they won't be able to get that SAF plant from Sabah, right? Yeah. Sorry. Okay. There was I wouldn't call it short seller report, but there was some website that was saying or article that mentioned that they may not get the SAF plant. So that is going to the obvious thing that's going to be the big overhang for this company, for the share price at least. But we think our assumption is they will get it, and even before getting it, they will be also getting some. They will also be looking at other orders in Malaysia, maybe like biodiesel and so forth. So this is not the only order. Of course, this is the one that took the share price up to, I guess, to something. So we are still fine, and I think to the managements, there's only so much they can do in terms of due diligence. I mean, they did the due diligence or the ability to do financing. That's as much as they can say until they get the contract. No matter how much the management can say, I think the market will still be skeptical until this deal is actually confirmed seal. So we are looking at maybe 1 or 2 months before they can seal this project, especially the financing part. That's the most important. IX and Q&M Dental, I leave Nanofilm to. So for us, Pharma, I think we are still positive. I think the $1 target price has not changed. The thing right now to watch is consumer. I think the wafer min is on autopilot. So for those who just to dial back again, so wafer min is that contract where they got the US Army to buy and also to fund the phase 3 development. I think that is on autopilot, my own view, because they do have regular meetings, consultations with the army to get the project ongoing and so forth. So that is on track. But this stock is not only playing on that wafer min, they're also trying to enter the US consumer market. I think they're trying to even do a B2C model. So that is the other big area that they're trying using because in the US and with the new US partner and liberalization of peptides. So in the US, peptides the GLP is technically a peptide, the Ozempic and so forth. That's technically a peptide, I guess, human amino acid or enzyme, and that is opening up. And with that opportunity, they might want to put peptides into their wafer min under the tongue rather than you inject it, and try to go B2C. I think go direct. I think that would be one opportunity. For Q&M Dental, we are just waiting for the acquisitions to firm up. Yeah. So Q&M Dental, if all the acquisitions were to happen, the earnings will grow by 80% because it's all earnings accretive. Yeah. Okay. Yang Zhejiang Shipping, please comment on it. Any target price? Yeah, we don't have any target price, but I think the container shipping rates have been quite weak recently, so maybe that was one of the reasons. And they haven't been securing. The order book has been a bit light in terms of securing new orders. I think that would be one of the reasons why the share price was a bit sluggish. But we don't cover Yang Zhejiang Shipbuilding, although of course we monitor it very well. Paul and Team Ultra Green, please comment on it and its target price. Okay, so Ultra Green, we actually do like the company. It's very niche, so it's not a easy sector to monitor. You know, you're talking about um, it's a fluid that goes into the blood during operations and so forth. So it's a very niche thing, and it's very hard to track for most investors. But for us, we do it appears we do kind of like the growth story because they are actually penetrating to more and more procedures and so forth. Yeah. But just watch out for it. Yeah. Any idea of serial achiever AI infrastructure contract? Serial achiever. Any idea of serial achiever AI infrastructure contract? So I think that could be an area that they could be pursuing. I think this would be an opportunity for any electronic distributor to move up the value chain. Because if you're a distributor, you're virtually doing a financing business. I mean, you buy, you keep inventory, and then you pass it on, and then you sell it to the customer who wants it. So, uh, AI infrastructure could be one way where they could actually maybe provide, they could actually help build a data center, help become a neo cloud, or maybe even provide all the components for a newer cloud to operate. So for me, this will be a big opportunity for any electronics distributor because if you look at the model of a neo cloud like CoreWeave, one of the strength is access to the GPUs. And if I'm not mistaken, the rental rates of GPUs right now, because you can actually rent the H100 NVIDIA, and I think those rates are still rising because there's such a shortage now. So this could be an opportunity for them. I'm not sure. Yeah. Hypo Ice Biopharma has 36 million outstanding warrants expiring 18 July. Will this affect the share price? I think most of this, probably 20 over million of it comes from the CEO, and I don't think the CEO is looking to sell at this price. He did sell one block after holding it for 10 years since IPO. But I don't most of it will be held by the founder and CEO. So and I am not sure if he's going to sell anymore at this price. Yeah. So I don't think that warrants will be overhang. I think most of it, yeah. Will Thai Bev benefit from the World Cup? Okay, so it will benefit. I mean, logically, when there's a World Cup, I think probably there'll be more partying, more drinking. I'm not talking about myself, but as an analyst, when we look at these results, we won't trend line this. So for us, we view it almost like a one-off. So we won't take like, World Cup because the World Cup only happens every 4 years. So although they will benefit, but the market may not respond to it because everybody knows this is every 4 years a one-off that's happening for them. Because you're not going to have a World Cup next year. Then when the earnings down, then you just say, oh, the stock is so bad. Yeah, but so most of us will try to kind of remove that part. Although you can't do it, there's no exact number to remove, but we will take into account that. Riverstone peaked $1, then down to 85 cents. Do you think they still move up? Yeah, I think the outlook for Riverstone looks positive. Firstly, the ringgit is weakening back again against the US dollar. So the results has been big for most of the glove makers because of the strong ringgit. But I think that's reversing. I think the ringgit is weakening because it is seen as all importing countries. Although officially Malaysia is an energy exporter, but most of it is LNG. So they are still importing crude oil, and anyone importing crude oil, the currency will weaken. And also because of the Middle East crisis, there's been a bit of shortage of the raw materials for the synthetic rubber. Again, that slipped my mind. What is the exact raw material name again? But so as a result, supply has kind of shrunk significantly for synthetic or for nitrile gloves. So the supply, because of lack of all feedstock, so that helped push up the price for even their commodity. Commodity means the healthcare glove that sell to the US. That used to be, I think, $14-15 per 1,000 piece, now went up to $20 per 1,000 piece. Of course, cost also went up, but the Chinese also raising prices. So I think that's why the sector turned around. Seatrium has corrected. Why so worth to invest? Has it hit value? Yeah, I think probably disappointment. There hasn't been much contracts coming out from Seatrium. But one interesting thing for energy that makes it a bit more bullish is that, unlike AI infrastructure, energy infrastructure, if you look at all the oil majors, I think the last 4 5 years, the capex for all the oil companies has virtually been flat. So you could say there's a bit of under investing in energy. So longer term, it looks fine. I mean, for energy because there's not much investments, but I really don't have any strong views on Citron. We don't really cover it, but I think if it comes down low enough, you can always take a bet. So this stock is like a trading stock. You just buy it and then just wait for an announcement and then you just sell it. Nobody looks at the results because everybody looks at contracts. So probably there's been a lull in contracts and then maybe there's an opportunity now, I guess. Yeah. Any idea how Top Glove will do an upcoming result? So Top Glove will release their results on Thursday. We'll do a Phillip on the ground for everyone. But I think the results should be strong because uh, they are doing also latex and latex is so because when nitrile price go up, latex will also follow, and latex has less competition from Chinese. And number two, like we mentioned earlier, the stronger ringgit, I mean the weaker ringgit, and also the 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 shortage of supply. The Chinese has also been raising price, so all this will be positive for them. But I don't have an exact number for you because we don't cover the stock. Yeah. Add value tech outlook after IPO, SpaceX. So add value doesn't supply to SpaceX or Starlink. What they're doing is they are supplying maybe to our local government here and also to EMASat, to all the existing space sorry, all the existing satellite companies. So not so much SpaceX. So of course the hype will be there. I think the whole outlook for space. So yeah, but not a direct link. Which Singapore stocks will benefit from the Hormuz open? I think the clearest one will be transport. I think airlines will be will be the most immediate beneficiary because oil price will come down. So that will be the easiest one to play. Emerging markets will also improve, like India, Thailand, or India, Indonesia, because there'll be less pressure on the currency and then less pressure on inflation and the economy. So emerging markets and airlines, I think that's the best ones to play. Okay, I'll leave the ceasing one. Hello, what is your take on Track 2000? What is the reason for the run up? Sorry, I covered Track 2000 last time in 2002. Since and then ended 2004. Since then, I don't really been following the company, but I don't have an answer for you. Sorry. Any thoughts on what are the potential picks and shovel counters to accumulate instead? Yeah, so the picks and shovel counters is essentially the equipment guys. Semiconductor is technically the picks and shovels. When this huge data center roll out compared to the hyperscalers. So hyperscalers are the ones that's paying for the picks and shovels. The gold miners are hyperscalers, but the picks and shovels are semiconductor. Can you give your take on Yoma? Oh, okay, so Yoma is one of those really ultra contrarian bet, so you're betting that because I mean no investor wants to go into Myanmar, I mean, in general because of the political risk. But you're taking this really contrarian bet that the worst is over for the country and it will slowly recover. FDI will slowly recover. So that is your bet. And then for Yoma, the bet on Yoma is a bit clearer because ever since the coup happened, I think in February, I think 2021, I slipped my mind, so sorry, the exact date of the coup, but since the coup happened, no, this company has really taken all the blows. They've taken COVID, they've taken flooding, they've taken earthquake, currency devaluation, spike in interest rates. So they've taken everything and they still holding on and performing well because of property sales. So the bet on Yoma is easier, but the bet on the country is a bit more challenging. So you have to take that contrarian view that Myanmar will slowly get assimilated into the international community. But news flow for Yoma, the one news flow to watch is Yoma Central. So most of the debt on the balance sheet is tied to this big project in the center of Yangon. Ironically, the valuer raised the valuation of that property. So any movement, any ability to sell this project to foreigners, and so that will be the big share price catalyst. It's a signal, of course, that this project is being revived. And the second signal is that foreigners are coming back. So this Yoma Central project is a huge catalyst for this share price. Something to watch. Yeah. What's the latest development on Asia Force? Yeah, sorry, I not really heard of this. IX Biopharma, your target price is no exaggeration. QMM will result in any cash call diluting. So QMM is they have okay. Your target is no okay. So my target is $1, so no change. For QMM, whether there's a cash call, they might do bonds instead of a cash call. So if you recall, they have sorry, sometimes the exact number slipped me. I think they have a 70 or 90 million dollar. I'm getting confused with Takraw. So anyway, they have a bond out there, and but that facility has ability to grow bonds. So I don't think they'll do an equity raising. Most likely they will do a bond. They will do another bond, raise more bonds to fund this if necessary. And do remember that they are issuing shares. The shares that they're issuing to buy these companies are at 70 cents. So whoever taking the shares, they're taking the shares at 70 cents. So they are not. I don't think an equity issuance. I think it's more of a bond that they will raise. There's this inflation MES thing. I think I'll leave it to Z. Bond market question, I'll leave it to Z. What's your view on Genting? Let me take this last two. So for Genting Singapore, for me, it's almost like a work in progress construction site for now. It's only in 2030 the whole RWS 2.0. From now to then, they are losing market share. So I mean that's a general view. Things are improving because all the new hotels are coming up, but they are still the loss in market share in the VIP is huge. They used to have 40% market share in VIP, 60% by resorts. By Marina Bay Sands. Right now, their market share is only 20%, and I don't see their market share recovering much. Of course, they can always give out credit. I mean, easy to do that, but I don't think that's what they want to do. Looking for quality. So I think for Genting, this has to be a really patient. I don't think this is a 2026 or even 2027 stock because RWS 2.0 is still under construction. Yeah, but maybe the worst is over in that sense because they are recovered. The hotels are starting to come back online. They are renovating hotels, but I'll be a bit wary of this stock for at least this year and maybe even next year. Will Singtel benefit from the okay. So from the ceasefire news, so Singtel will benefit indirectly through stronger currency in emerging markets. So always remember, Singtel, a large part of the earnings now come from India and Indonesia and Thailand. So if the ceasefire happens, oil price come down, then emerging market currencies improve. So this will benefit Singtel. The most important one is Bharti Airtel. So Bharti Airtel is almost 40% of Singtel target price. So the valuation of Singtel for most analysts, Bharti Airtel, the share price is about 40% target price. And Bharti Airtel is important not only from valuation but also monetization. So the last few years, every year they'll probably sell 1 to 2 billion of Airtel. But if the share price don't go up, it's hard to sell. So it's like that piggy bank. So if this piggy bank need to go back up again, otherwise there's no monetization. Or not say no, there's less monetization less routes for them to monetize assets and pay off the special dividend. Although they probably got it covered for now, at least they got already 6 over billion of assets monetized. Yeah, okay. I think the bond and inflation, I leave it to Z. Yeah, thanks everyone. Yes, sorry, some we can't answer because we can't cover every stock. Yeah, thanks.
Yeah, thanks, Paul. So, I will try to answer. Will rising inflation in Singapore, do you reckon MS will strengthen anytime to curb the imported inflations? I think it's still early to call for another MS tightening at July policy review. In fact, MS already tightened in April by slightly increased the rate of appreciations of the near policy bands. And if you look at the latest data in April showing that the headline CPI is actually stable at 1.8 year-on-year, and core CPI is actually trending down from 1.7% to 1.4% year-on-year. So we think that MS will wait for more data to clarify the next movement. Yeah. So the next question is how is the bond market and yield currently? So last Friday we do the market recap. Overall the bond yield has been trending lows because of market are still optimistic about the US market, and since I mean like Singapore has no any surprise data in domestically, so it largely track the USD movement. So overall the yield in the bond market last week were trending down. So in near terms, the bond yield will, the near-term catalyst will be depending on what's the guidance from the Fed. So I mean, like if in upcoming June FOMC, if the Fed sound hawkish, so we are expecting the bond yield will be trending outwards, then the bond price will eventually coming down. Yeah, that's all from me. I will hands the times to Zane. Thanks.
Yeah, sorry. Just a bit more before I hand over to Zane.
Oh, all right.
Yeah, so for nanofilm, I think I'm still positive because nanofilm ultimately they are a coating company, and their coating can be used within the semiconductor supply chain. So traditionally their coating was being used in the circuit board tools, the pins and needles, if you want to think about it. So that one is more back end side, but currently they are trying to move towards the front end, which is the coating being used on wafer lapping carriers. So basically it's the compartment that holds the wafer in place in the front end stage. Yeah, so that's the developments for nanofilm. Yeah. Yeah, I think for AM as well, what's the outlook for AM going forward? Do I expect further upside and new TP? Yeah, so just to clarify, we don't cover AM, so we don't have a target price. I think going forward, some potential catalysts for AEM may include for example the overall positive sentiments in semiconductor as Anthropic and OpenAI comes into the IPO scene. So I think that AEM may benefit from their customers increase, I mean positive sentiments on their customers' share price. For example, Intel as well as the memory players. Yeah, so I think that there is still catalyst for AM going forward, but currently their PE is forward PE is about 50 times. So that's at a premium. Yeah. Yeah, I think there's a KLA stock split makes it affordable, better option to Black Material or ASML or LUM. Yeah, so just a bit of context. KLA, they are mainly in the testing and the yield improvement process. So they are also at the front end side of the semiconductor supply chain, and they help the entire foundry as well as memory players to increase their yield percentage. So their equipment is also highly critical in the front end stage. Currently, they are trading at about 50 times PE. So that's about in line with the equipment players. Black Material, ASML, or LUM Research. So that is also an alternative. I feel that it can also be played over there. Yeah. Okay, I think I hand over the time now to say thanks.
Thanks, Imran. I'll move on to the EA question. So I will just share my screen for that. Yeah, so first question is on Q&M Dental. So in terms of the trend overall, it's still a very steady uptrend that it's continuing on. And in the short term wise, I think we're seeing some short term sideways range movement. Recently, price pullback towards these two support levels at this around the 57.5 cents horizontal level support as well as the general support, some rebound from here. But I think near term wise, I think most likely we'll still see some sideways movement first level of resistance at 61 cents, which was the breakdown level, which was previously a key resistance as well. So that I think that would be the key resistance. And then I think generally support would be around like these 59 cents over here. So generally I think this will be still pretty much range bound for the time being for Q&M. Yeah, next one for SI, I think generally still pretty good momentum since middle of May. Today I think price managed to cross this 708 level as well. So I think most likely we could see a retest of the 720 swing high over here. I think overall momentum still looks pretty strong in the short term as price is still holding the 5 and 10-day moving averages. Yeah, and I think support generally will be around $7 or 708 for now. And if we cross above 720, I think we could still see some possible upside momentum towards next key level will be around 740. That's for SIA. Next for Bank of China. So for Bank of China overall is still a very strong uptrend as well if you look at the charts. Recently price breakout this consolidation at 530 about 1 week ago. So I think overall it's still very strong uptrend. And I think short term wise we might see some slight pullback as in terms of the Bollinger Band. I think price is at the upper end of the upper Bollinger Band area. So we might see some slight pullback, but I think support generally will be likely to be found at if it does retest like 545, which was the recent slight horizontal resistance level. And then this is also the 5-day moving average as well. So you could see some slight pullback, but I think that will be well supported. And afterwards, I think price will continue the trending higher. The next questions are some US counters. So first one for MSFL, which is this is the 2 times long Microsoft daily ETF. So in terms of the charts, I think it's been pretty weak recently, breaking some key levels since the breakdown of this $20.30 level. Then price has been holding, trending downwards daily, holding below the 5 SMA level, breaking below 1750 as well. So I think for now, I think there's likely to be some near-term support with Thursday and Friday holding 2 lower weeks over here. So some there's no like new lower low for now. Some support coming in around this previous recent level around 1550. I think short term wise we might see some slight rebound towards like 17 to about 750. There's some resistance, so I think we might see some slight rebound and some sideways movement afterwards. Next one on TJX. And for TJX companies overall still a very strong uptrend overall. And in terms of the recent price action, I think price after some consolidation over here at 160. Last week price broke out this 162 and also above this 165 as well. So I think we might see some short-term resistance as back to retest this trend line resistance over here at around 169, 170. So we'll be seeing some slight pullback, I think, but price will be likely supported at the 5 if it does hold the 5 SMA level, which is currently around 166. So I think generally 165, 166, I think that will be support for now. And price might do some sideways near this 165 to 178. Yeah, in the short term. And then next one for NVIDIA. For NVIDIA, in terms of the chart, I think some weakness last week when it broke down below this 211 key level, which was this previous strong resistance, and then price did a retest towards the end of May. There was a rebound, and then last week it broke down this 211 key level. Key support is about 197, 200 over here. So I think for now, with the rebound, I think we're likely to see a retest of this 211, which is also around the 10 and 20 SMA levels. So I think that could still hold as some resistance in the short term. On the weekly itself, also that's also like where the 5 and 10 SMAs are likely at as well. So there could be still some resistance over there in the short term. Yeah, then I think price might do some sideways with support around 205, 206 around. The next one on Food Empire. So for Food Empire, generally, price has been consolidating sideways since middle of April. I think that's still continuing on price, doing some sideways at the range support area around $2.35. So I think for the short term, for now is some resistance. I think could be at this 10 SMA level as well as this swing high around 239 to 241 level. So could be some sideways, but if price can break above that, the next key resistance will be around 246, which was this breakdown level at the start of June. So in the short term wise, I think price will still hold this $2.30 support. I think could be some sideways, maybe some slight bounce if it can overcome 240. And next one for Everglory, I think price has been just in a sideways consolidation. Some short-term weakness with a breakdown of 84 cents in the start of June. Then price pulled back to this horizontal support around 79 cents, held steady over here, and some rebound today. So I think short-term wise, we might see some resistance at this 83 cents, which is currently a 20 SMA, to about this 85 cents area, which was previously this support level that broke down over here. So I think most likely we'll see some sideways movement. Then support for now, I think will be around the 81 cents, 81.5 cents level. The next on Citron, price has been pretty weak recently. So, and then but recently, as with Thursday, Friday, there was like no new lows being formed and some two lower wicks. So price holding steady, holding some support at 192 for now. I think in terms of the RSI also hit like an oversold level 20. So I will expect some rebound for now to retest some of the recent breakdown levels. So recently when price came down, it broke below this $2 to 204 level. So that will likely be the short-term resistance, where currently is the 10 SMA $2 and 204 is the horizontal level resistance. So I see some rebound to test these levels, and then price might do some sideways afterwards. Next up, there's a question on May2, 1357. Yeah, so for May2, overall price has been on a downtrend since July of last year, I think, and then since start of March, price it has moved into a bit of more range consolidation, generally between around $4.30 to about $5.50. I think that will likely still continue for the time being. So recently there was a very sharp spike towards like 550 and then a pullback again. And then so I think price action wise we might see something similar that's happening at the end of May. So when price pullback, it just did quite a bit of sideways again. So I think generally I will expect some sideways movement for now, some support around 450 and resistance, there's some resistance around $5. So most likely I think sideways movement for May2 right now. Okay, next one on there's some question on HR net infotech system as well as credit bureau Asia. So for all these three counters, the volume is relatively lower. So in terms of the TA, it may not be that as accurate compared to the higher volume counters. But in terms of the first one, HR net group overall still has been on an uptrend since June last year, and then some sideways movement for now. So good thing is that price is still holding above this 72 cents, 73 cents resistance levels since middle of April. Some resistance are still holding at this 75 cents around there. So I will expect looks like most likely some sideways movement for now. Yeah, and also Bollinger Band is also pretty flat as well. Next one for Infotech system, I think price has came back. Some weakness with recently was the breakdown of this 95 cents previous support level holding its resistance right now, and price retested the 90 cents level recently. So a bit of sideways right now. I would expect price to kind of move sideways, continue for now. some resistance in the short term will be 93 cents about there, as well as the 95 cents level. Yeah, then below 90 cents, the next support level is around 87.5 cents. Okay, next question on Credit Bureau Asia. Also, generally, for now, the trend is quite range bound. So, yeah, and also very low volume as well. So, for now, general strong resistance areas about this 119, 121 area, which today there was a spike upwards. I think most likely, I think we'll still see this range holding with strong support around 112, 113. Yeah, in terms of the volume, you can see it's still pretty narrow and also quite flattish as well. So most likely we'll see this range bound performance continue. And above that, the next key above 121, the key resistance upwards is around 126. This area, and below 112 is about 108. Okay, next one on oil tech. Yeah, so for oil tech, I think price some slight weakness recently with the since the breakdown of 208. In terms of the short term price movement, I think price in terms of RSI hit close to the oversold level, close to 32, and some slight stabilization over here where price held steady around the 170 level about that. So I will expect some sideways movement for now. Resistance in the short term will be around this 189 to about 194, where this was the swing high of 4th of June, as well as around the 20 SMA level. And then support for now, I think it's about 174, 175, where it's around the 5 and 10 SMA levels. And then, yeah, so I think we'll be pretty much sideways for now. Next one for soybean also similar. Since the breakdowns of some key levels like this 89 cent support as well as the 81 cent support, price has entered into range consolidations since about 1 month ago. So I think we'll be still relatively quite range bound for now, unless you can close at this 81 cents resistance level. Yeah, then but for now, generally it's still trading between 74 cents to 81 cents for now. Then above that, the next key resistance will be around the 86 cents to 89 cents area. Next for CSE Global, I think price has pulled back quite a bit recently, and so it has hit this blue line, which is the 100 SMA level. Price is holding relatively quite sideways around there after some high volume selling at the start of June. So I think for now, most likely we'll see some range bound. 137 is a key resistance level, which has been tested twice, and today is still testing around there. So I think above that will be around 143 as the next level, and the next one is 148. So most likely in the short term, I think some range bound movement. And support is around the 133 level or there. So if you can, so probably some sideways until you can overcome the 10 SMA level, which is coming down, then we might see some further rebound. The next one for Valuetronics, I think overall Valuetronics is still holding quite steady. Overall, the uptrend I think is still holding. And then the recent price pullback towards the 20 SMA level, 106, has been holding along with this short-term trendline support as well. So I will expect price to kind of recover back up to retest this key resistance level 119, 120. Yeah, then if you can try to close above there, then we might see the uptrend continue for Valuetronics. And then next for micro mechanics, also some price pullback recently, but also managed to hold steady around 272. and then broke out this short-term downwards resistance line. And yeah, so I think for now some rebound. We might see some resistance as it goes as it tries to retest this previous 311 to about 320 area, which was this support level back in since in the second half of May. So I think there will be some resistance in terms of support. It does backtest this to around this 287 to about 293. I think that will be the near-term support. So could be a bit range bound for now. Yeah. And next is AM. I think AM could be still relatively sideways for now. So after a strong rally, I think price is mostly just consolidating this flag formation between 860 to about 1050. So looks like it's still consolidating sideways. Unless it can close above this resistance level, then we might see an uptrend continuation. Yeah. But for now, I think just moving sideways for now. Yeah, good thing. Overall, I think it's still pretty strong. On the weekly time frame, is still holding the 5 SMA weekly as well, which is currently at $9.95. The next question is on CDL as well as UOL. Yeah, for CDL, I think generally in terms of the chart, it's quite range bound, I would say. So yeah, since the price retested this to 786 level, rallied back to retest the resistance and then pull at 863, and then there was a pullback and again. Yeah, so I think generally has been quite range bound. I think for now we might still see the price try to retest the resistance in 863. Then if it can close above that, we might see some further rebound. Given that it will be likely the third retest. So if it can cross above the 863 level, the next, I think we could see some further rebound towards 895 as the next key level for CDL. Next for UOL also slightly weaker, but I think is generally still holding around this uptrend support line that was formed since September last year. And then in terms of the horizontal levels, also holding around $9.80 for now. So I think some resistance will be around the $10.30 level for now. And so I think for UOL could be a bit more sideways and weaker compared to CDL. And then our next one, there's questions on C Limited as well as Grab. Yeah, for C Limited overall, since the downtrend, I think generally price movement wise, I think still quite range bound as of now. Yeah, it's generally still quite strong resistance at the $95 level, and then support overall is still holding at 82. So I think that's the general range for now. Below 82, it will be 77. Yeah, then for now, I think some resistance is this 86. This 86 level over here. I think if you can go above that, the next key resistance will be around $89 to $90 this level. So I think generally will still be very sideways and range bound. Just trading at these few support and resistance levels. And next for Grab, I think generally price action is still quite weak for Grab since in this downtrend, and then also price also consolidated sideways at this key support around 350, but the support gave way. So afterwards back to the next key level around $3.30. Generally price is also currently trading below some of the short-term moving averages like the 10 and 20 SMA. That will likely be some resistance. So I think strong resistance for now will be at the 350 level. In terms of the next support, I think we need to reference back to some previous earlier earlier levels from in August 2024. So I think that will be around 320, 390, 320 as the next key level over here. And then subsequently will be around 308. So for Grab, I think price action is still relatively weak. We might still see some continued downside. We make some questions on Microsoft as well as Meta. So for Microsoft, I think for Microsoft, price has been for now has been pretty weak, but has held the support at 384 2 days in a row, which was previously this horizontal level back in start of April. So we might see some slight rebound for now. I think the resistance will be around $400 over here. And then retest of the 5 SMA level, and we might see some sideways afterwards. And then next one for Meta, I think price action wise still pretty weak. Since the breakdown of this 600 level, has been trading below the 5 SMA level. So I think some resistance for now will be around this 580 level, then followed by the 595 to 600 level. So I think will still be pretty weak for now. Yeah. Then 560 is some support. Below that, I think will be a possible gap fill at 540. Yeah, if it continues to break below this 587 swing low level. The next question is on Zijingo International. Yeah, for Zijingo, I think overall has been in a downtrend, and then also so some slight rebound today, but I think generally the resistance for now could be at this 124, 125 level over here. This previous range consolidation start of this month. So when price broke down over here, I think the support will turn to resistance at 125 alongside with this 20 retest of the 20 SMA level as well. So I think that will be the key resistance for now. Then support level, some support for now will be this 113, 114 area. Which was this horizontal level as well as 10 SMA level. The next one is on GLU, which is this Lion Global Singapore Physical Gold Fund units. So for this, volume is relatively low. So in terms of the chart, I think it's doing some rebound for now. Then most likely I think we'll see some resistance back at this 470 area. So price at the lowest it was around 436, doing some rebound for now. So I think 470 I think will likely be quite a strong resistance with the 20 SMA level around there as well. Yeah. I'll take two more on ServiceNow as well as Circle. Okay, so first one on ServiceNow, I think price pullback has been quite a lot. The retest of this 110 was like it held for like 1 day, and then afterwards it broke down again, and then back towards this 99 level. So I think overall 95 to 99, this range consolidation level will be quite a strong support. As of resistance for now with a rebound, I feel that the key resistance will be 110 to about 112 over here, this area over here, where it's likely where price will likely be the 10 to 20 SMA. So I think afterwards, then we'll maybe see some range bound movement. Okay, then on Circle, I think overall price action is still pretty weak for now since the double top at least 136. Price has been steadily trending downwards, breaking some supports around 108. And then another level was this at $89, $90. So next key support I think will be quite close, will be around the 74, so 475 level, which was previously this range level. And then also around the opening price since this earnings gap out as well. So that will be the next near-term support. Afterwards will be like 64, 65. Short-term wise, we might see some range movement if 75 holds, but with upside resistance at 86 to $90, this recent breakdown level. So I think will be a bit range bound. So I think that's all for me for the PA. I'll hand back the time to my colleagues if they anything more to add on. Thanks.
Fahmi, got anything on Adobe or Palantir? Yeah, okay. Anyway, let me just update on for Comfort. We think the earnings will still be a drag. I think will be weak because of the whole weakness in the taxi fleet, especially in Singapore. I think that will be going to be a drag at least for the next 2 to 3 quarters. That's our general view. For me, a comment on Adobe. Yeah, okay, maybe he's got some issues with his technical. But with that, I think thank you everybody. Thanks for your time and hope it was useful and hope to see you again next week and everyone have a wonderful week ahead. Thank you everybody. Right.